Hey everybody. So on TikTok last week, I asked you guys to vote or leave a comment below with a stock that you wanted me to do some technical analysis on. And the one that got the most likes would be the one that I would do. Well, it happens to be this guy right here, JUMIA. Well, that was my chair that just made that click. JUMIA Technologies, JMIA is a ticker symbol. Believe it or not, I have no idea what this company does. I've heard about it because it's, one of those TikTok stocks that people are always going like, what do you think? What do you think? I've never actually even, this is the first time that I've looked at the chart, and it couldn't have happened on a better day because it's down $4.61 or almost 12%. Now, as a trader, I'm not going to concern myself with what this company does. I'm not going to concern myself with what their revenues are or their price to earnings or any of those things that you look at as an investor. I'm not going to look to see if they have debt, for example. I don't care. I'm trading simply off of the charts. So that's what this video is going to be about. And we're just going to walk around and look at a couple different scenarios here as possible trades. I know everyone's going to get on me in the comments going, in hindsight. But remember, I'm going to walk you through this as if we were in real time. So we don't know what it's going to do in some of my examples. So today is Wednesday, March 24th. It's 10 o'clock. I'm just going to start with here yesterday. This was Tuesday, March 23rd. You can see right here at the open, it drops. It's very choppy. It's up, it's down, it's all over the place. I don't like buying right at the market open because you've got the buyers coming in, you've got the sellers coming in, everyone's selling, everyone's buying, it's all over the map. I like to wait for something to happen. Now, these quick little sell-offs in the morning, right here, for example, I'm not going to try to jump in on anything yet. That seems the most like gambling to me, going, okay, now. What I need as a trader is not just one little bit of technical analysis to tell me I think things might be reversing course here or moving higher. I need several. So here are the ones that I use in a quick snapshot. The first one I use are the Bollinger Bands. That's these three lines here. Now I know there are four, but I'm going to get to the fourth one in a second. The Bollinger Bands are comprised of this red band here, which is resistance. That means the stock is resisting going higher. The middle band right here, this light blue, is the 20-day moving average. And the last one here is support. That's the purple line right down here. And the last one is this green line here, which is a moving average. It's the 50-day. And then you've got this yellow line here, which is the 200-day moving average. A lot of traders like to use these as indicators that a stock might be going higher if it crosses over a certain moving average, or lower if it crosses below a moving average. We'll look at some examples. And another thing I look at is the volume. That's this graph right here. And the last thing I look at is the relative strength index, which is this chart right here. I want to walk you through a couple of trading examples and scenarios here. First one is that this stock is pretty much heading into a big downtrend in the morning. Right? We can see lots of selling with lots of volume. But something starts to happen right around here. And the first thing that I notice is it starts to enter oversold territory. Anytime it crosses this bottom line, it indicates that the stock is oversold and could turn around. Of course, no guarantees. Now, as a trader, you have a couple of different scenarios, a couple different options here. One of them is something called a scalp. That is a very quick trade, in, out. And I'm going to use actually, let's just use the calculator on the screen here to make it easy so you can see with me. So let's say, for example, that we were to pick this stock up right here at 38.78, and we were to sell it right here. And I'm going to explain why I'd be selling at these prices in a second. So 40.16 minus, what did we say? 38.85. It's $1.31 difference. So if you bought 100 shares, that's your profit. So why am I buying it right here, and why am I selling it right here? Well, I'm buying, in theory, because it enters oversold territory. So I'm going to make a scalp trade. That's very quick, in, out. So I buy here, I sell relatively quickly, somewhere around here in the 40s. And the reason I'm selling right around here is because I noticed a couple things. One, first of all, it does start to have a little bit of a rally. But these kind of rallies right in the early morning make me nervous. I don't think that they're sustained rallies. Usually what it is to me is the inexperienced traders or people who have put in buy orders at a lower price, their orders are getting filled. So the stock is having a little bit of a fake rally here. It's called like a fake out breakout. Some people say that. It breaks out a little bit and it starts moving, but what happens? Oh man, the volume starts to drop dramatically. And so look what happens. It starts to level off and then starts to reverse course. So even though we have oversold and a crossing of a moving average, right? This is promising. The crossing of the moving average is promising. The thing that's not promising is this dramatic slowdown in volume, which means that the interest is starting to fade. People are losing interest. Uh-oh, they're selling. So if you get in down here, you're going to likely want to start to think about getting out around here. I know a lot of people will think, well, it's just going to keep going. But if you look at the indicators, you'll see that it's not likely that it will. So as a scalp trade, I'm going to get in here, I'm going to get out here. If I'm buying 100 shares, it's going to be 130-ish quick bucks. Is it worth it for me? Probably not. I probably wouldn't have made a scalp trade like this because I'm an experienced trader and I can see the signs that this probably won't last very long. These kind of things are usually what's called a dead cat bounce, where it pops for a little bit as for the reasons I just specified and then heads lower, which it almost does, rallies again, and then it sells off. Now, you can see it does enter oversold territory yet again, but am I going to buy it here? No, and the reason is we're heading into the close, and you just never know what's going to happen overnight. So as a day trader, swing trader kind of thing, so as a day trader, I'm done. I'm not paying attention anymore to this stock for the day. Doesn't mean that it's off my radar yet, though. What we see the following day, which happens to be today, is this humongous sell-off right into the open. Big volume. And we see basically a similar pattern from yesterday, right? It's a similar pattern, except it's much more significant. The selling has really kicked in, and it's not stopping. It's sustained selling throughout the day. Even the buying is a little stronger than it was yesterday. But again, similar, more, but similar to yesterday, where we have that little bounce, it starts to rally, it crosses the 200, it crosses the 20-day moving average, but the volume starts to slow, and it reverses course, and it breaks out to the downside again, which is what I was afraid of here, except it actually happened today. And another thing I notice is it's staying on this negative side of these Bollinger Bands throughout the course of the day. This is just sustained selling all day. So at this point, when we break out here, the next thing I start to look for is, okay, when do we enter oversold again? Maybe I'll keep an eye on it. The fact, however, that we're staying on the negative side of this 20-day throughout the course of the whole day, and we're not really breaking past it, and we're not having stronger volume to the upside, and we have multiple breakouts to the downside, right? Breakout to the downside is this arrow here, this arrow here, this arrow here. I'm walking away. Now, does that mean that this stock is done? As a day trader, yeah, I'm not buying it today. But what about as a swing trader? Well, to know if this is a stock you want to swing trade, what you got to do is you got to jump back a little bit. So the first thing I like to do is I like to come over here and I like to go back 10 days. 10 days, I can see there's a support line kind of right around here, which we break here and it starts pushing lower. So 10 days isn't giving me a lot of information. I need to go back a little bit further. So now I'm going to go 20 days. Now we're talking. Now we're talking a little bit here. I can draw a support line. So what I'm going to do is I'm going to right click, and I actually should have done it for you. I'm going to right click and I'm going to go to add a drawing, and I like to use the price level because it's one set line. And I'm just going to connect the dots. Now I know we have this one day here, but you can see it was kind of like a flash crash kind of looking thing. You know, it's this one little line. So I'm going to set my support line right here because that's really where the support is. Boom. Then the second one here, it looks like the letter M. Boom, boom, boom. Then we have a strong rally, and then boom, right back here. So one of the things that we look for are stocks that are entering oversold territory. That's not the only way, though, that we know that we might want to buy a stock, right? When you're looking for oversold stuff, you're looking for stuff that's been oversold and might rebound. But there are also breakouts to the upside, which we see multiple ones here. So these are all potential trades that you could make, setting your resistance maybe here at 54, and you can see it gets kind of close. We are heading in overbought territory, which makes me kind of iffy on these trades. Although, you know, if you had purchased it around here at 40 and sold it when it had hit oversold a couple days later in the 49s, you'd have made 900 bucks if you had purchased 100 shares. But I probably wouldn't have made that trade because it's overbought. Now let's go even further back because we've already plotted out our support line. We've got a support line here. So one of the things to keep note of is this support line here. If it breaks this support line, which you can see it's holding at, right? Bounce, bounce, bounce. Then we have this pretty strong rally, which as a day trader, you could have made probably multiple trades, or even as a short-term kind of swing trade, riding this momentum a little higher. In fact, when we break this 200-day moving average right here, this yellow line, this is definitely a buying opportunity. You probably could have picked it up at 43 and then unloaded it in the 50s. That would have not been bad, right? On 100 shares, would have been an okay profit. But let's go back further, because now I'm curious, where could this stock go? If it breaks out to the downside, how much lower could this stock drop? So we come over here, and we're going to click on we're on the 20-day right now. Let's go way far back. Now, I'm going to explain the 180 days in a second, but let's first go farther back. Okay, here we are. Now, as a swing trader, I don't really care what the stock has done 6 months ago, right? Usually I like to go back, say 3 months at the longest, because I'm looking for the most recent volatility. I don't care what it did 6 months ago or a year ago or 3 years ago if I'm looking to make swing trades or day trades. I want to know what it's done. Hey, actually, this is kind of interesting. I want to know what it's done most recently, within the last couple of months, really. Now, what do you notice here? This support line that we plotted out, what do you know? You could actually continue the support line all the way back here. And let's do that. I'm going to set it right below just so we can see. Nah, fuck it. Let's just go right here. That support line has held up as solid support all these months, right? Here is support, and then these multiple bounces right here where it hits support and then goes higher and higher. So what this tells me as a swing trader is this is a pretty strong support, which means that it could also be a pretty good entry point, except that I'm noticing one thing. And what I'm seeing right here, this right here, with this little teeny trend up, but then it dies off and starts to come back down, this is a reverse cup and handle. All right, so we're back. I went and I Googled reverse cup and handle. I pulled up the image, and here's what we have from the Google. This big cup, except that it's a reverse cup because it's upside down. And then we see our handle. And then look what happens. When it breaks this handle, this means all of this was accurate, I guess, if you want to say. If it had gone higher and higher and had gone in the opposite direction, then it wouldn't be a reverse cup and handle. What do you notice about this chart? It looks kind of like this one. Inverted cup would be right here. We stop at our support line. We form our inverted handle. And then we sell off. Now the next thing we need to see is what's going to happen tomorrow. Does this stock bounce off support and start pushing back higher? Or does it break out to the downside? If it breaks out to the downside, I hate to tell you this, but it's not looking good. This looks like it could be the next support level, all the way down here in the 11s or 12s. Doesn't mean that it'll get there, of course. It's just an indicator of where this could potentially go. So for the hell of it, we'll draw one here, even though, I don't know. Is it likely that it, why isn't it clicking? Hello, there we go. Is it possible? Of course, anything's possible. Will it happen? Who knows? Now, let's say that this stock reverses course and starts to move higher. As a swing trade, where are some points where I think I might be able to lock in some gains and sell? So if I wanted to buy here, if it starts reversing, in other words, tomorrow morning, if this stock does not break the support line and push lower, where do I think this stock could go? Well, here's one level of resistance. So we're going to add drawing, and we're going to put one level of resistance. Look, right kind of here. I mean, it's close enough that we can say here's a resistance line right here. I don't know why it's not clicking. Hello. There we go. And then we've got one all the way up here. I'm going to do the same thing. I'm going to put my line right there. Now, I've done this a couple times in the videos. This looks confusing to me. We've got our support line and we've got our support line, but where is our price target? It's these red lines too. If you're looking at it, it looks a little confusing. So what I like to do is I like to go here and I like to edit properties, and then I like to change the color to green, okay? And then I do the same thing, right click, edit properties, change the color to green, okay. Now these are where I could be potentially buying the stock, here and here. And these are my price targets here and here. So assuming, let's just say hypothetically, this stock does not break support and push lower tomorrow. And then that would nullify this. This is not a reverse cup and handle if the stock starts to go back up. At what point can I consider selling and locking in some gains? Here at 53 and here at 69. Now, just because it has done it before does not mean it will do it again. That's important. I think a lot of traders think, well, it did it once, it'll do it again, and that's when I'll sell. I missed my chance to sell it at 60, at 50, whatever. I'm going to keep holding, and it'll get back to where I want it to go. It might, but it might not. Let's say it doesn't break support, it's at $34, and let's say we get in on 100 shares tomorrow at $34, and you're never going to time the bottom, so let's just say we get in at $34.50. We're going to have to do some reversing here with the stuff because, 51 is where we're going to sell. It's not negative 16, it's positive 16. And we have 100 shares. Our potential profit is $16.50. So that's our potential profit is $16.50. This is a substantial profit. And this could take weeks, if not longer, to get to. If I'm tying up $3,400 in a stock, or maybe even more, there might come a point where I see other investments or other trades that I'm missing out on because I'm sitting and I'm waiting for the stock to slowly move higher and higher. At a certain point, this stock might maybe hit overbought territory in the 40s, right? It could. It could say enough right around here and reverse course and head much lower again. Nobody knows what's going to happen in the future. That's why I like to look at a variety of different indicators. So it's entirely possible that even though this is my price target, we could get to here and things would change. So there's never any shame in selling bits at a time. So if you have, say, 1,000 shares, you could sell 250 here. You could sell the next 250 here. You could sell the next 250 there, assuming it gets to those levels. And if at any point it starts to reverse, you can also sell, maintaining the majority of your gains. If you only have 100 shares, it's, look, what did we say? We're going to buy it. Let's say it gets to $44 and then everything reverses course. And we were in at $34.50 and we have 100 shares. We've made $950. It depends, honestly, on so many factors. One factor is how long is it taking to get there? Is it inching along agonizingly slowly? At which point you might say, hey, you know what? This is ridiculous. I'm already up almost $900. It's taken 2 or 3 weeks to get here. I need that money. I'm locking in my gains. You could sell 50 shares. You would make, obviously, you would make half of that. So you would walk away with $475, keeping a little bit on the table just for the hell of it. Hey, maybe it does get to 50, at which point, 50 minus 34.50 times 50 shares, it's another $775 for you. So it might not be the full amount. Oh, I shouldn't have sold my other 50, but you didn't know, which is why traders often like to sell in bits and pieces as it hits certain price targets. It hits a price target, I sell a little bit. It moves a little higher, I sell a little bit more. Moves even higher, I sell a little bit more. So there you go. That's your technical analysis walkthrough on JUMIA. I don't even know if I'm saying it right. JUMIA, whatever. It doesn't really matter even what the name of the company is sometimes. As a trader, I don't often care. If I'm really honestly just looking at the charts and the data. And of course, by the way, it doesn't mean that I never look at the news. You absolutely want to look at the news and see if there's some big story that drove this stock down. If it's a nothing story, oh, people are nervous about the markets or whatever, then I'm not concerned. It might even be a buying opportunity. If it's this company is in serious financial trouble, oh no, then I don't care what the charts say. This thing could continue going much lower. So it's always important. Don't neglect the news. Don't neglect looking at the headlines to see why the stock is actually dropping. Wondering if there's anything else that I need to cover here about this guy. I guess I should throw in my disclaimer. I'm not a licensed financial advisor. Don't buy just because we're doing this video. I personally wouldn't be buying right now. I would wait to see what happens. If it breaks the support, then I'm definitely not buying. If it reverses course, I'm going to wait for very strong, sustained volume with multiple breakouts to the upside, like what we see here, like what we see here. Anytime you see multiple breakouts to the upside, Look, even here, it goes from 8 to 20. That's a significant jump. Then we see multiple breakouts here. From 13, it goes to 17 or 18. That's significant. Look at this one. We see multiple like consistent uptrend here. So a breakout, breakout, breakout. Maybe at this point, if you look at the volume and you go, wow, this thing is on fire, you're making a pretty short-term swing trade over the course of several days, riding it higher and higher. On the other hand, maybe not, because you're noticing, hey, it's dramatically overbought, which means it could sell off. You got choices. There's things you need to consider. So, with that being said, I hope this video was helpful. I hope you learned something. Thanks for watching, and have a good night.